Kevin Green is with us, senior markets correspondent. And as I watch all of these levels, none of them are new. And I think that tells a story. When this first sort of kicked off, we were saying, oh, oil's below 65. We haven't seen that. The VIX had gone to 60. We hadn't seen that. You know, the 10-year bond yield went below 4%. We had. And so at least we're sort of somewhat in a range now. Does that make it feel a little better?
No, not at all, Nicole. I think we have maybe some optimism here. Like, hopefully we see cooler heads prevail. But as you're kind of talking about those levels here, I think it depends on who you are, right? If you're a consumer and you see oil prices sitting down at around $55, $56, gas prices kind of go down at the pump, does that make you feel a little bit better? Possibly, but also the rate of change of a lot of those products is a little bit concerning. In fact, I mean, if you're looking at the 10-year Treasury futures here, we've seen a 66 basis point move from Monday to today. And that's something that's just out of the ordinary for Treasury markets as a whole. And I think you're just continuing to see some of that uncertainty, as Claudia was just talking about, permeate throughout the markets just in general here. So I would expect continued volatility here. What's actually very interesting before we talk about the levels, the Hang Seng Index, China's one of China's indexes here, actually ended up in the green for their session, even though we have a lot of this uncertainty being priced into the markets as a whole on a global scale here. So that is something to be mindful of. But if I'm going into the open here today, a couple of areas that I'm looking at, and we have a very wide range just because we are seeing a lot of uncertainty, and you're seeing that reflected in the S&P 500 options market just in general. The 5,000 level is going to be key. It's going to be your first area of resistance. We're sitting at around 20 points below that for right now. And if I'm kind of looking to the upside here for today, looking at 52.55 to the upside, and then to the downside, if we do have any further breakdown here, 4,800 could be on the radar, Nicole. In the longer term time frame, we are kind of sitting in a range, but it's a very wide range. It's like a 400-point range. So technically, if you're looking at the longer term chart, a little bit difficult. But on the intraday here, if we don't hold 4,800 today, Nicole, we could see a potential flush at the 4,600, because that's where I'm seeing a lot of flows early this morning going into.
And right now we're at 49.78, so not near 4,800, at least at this moment. And that was my point, because you noted the velocity and the big moves we've seen. And with the exception of oil today, I'm not seeing huge moves. And so there you have it. Let's talk about some of the yields, though, because that's an important story. Also, I hear a lot of folks selling bonds, either to put that money to work in equities, to buy things at lower prices, and or to cover some margin calls. Tell me what you're watching when it comes to yields. I know you have a special chart for this.
Yeah, so if we're kind of looking at the yield complex, we have a very big auction. This is probably one of the more pivotal auctions that we've had over the last couple of years. The 10-year auction is going to take place at 1 p.m. Eastern time today, and the market's going to see and look for demand. We had a 3-year auction yesterday. It was fairly weak. We actually had a pretty decent tail there, just meaning that there was just a lack of demand. Dealer takedown was sitting at around 21%, which is actually a pretty large number for dealers to really take. But what I'm looking at for yield here is a little bit more clarity. There's 3 scenarios that the market is really trying to float out there, Nicole. The first 2 you kind of talked about. Is this a situation where you have some sellers getting selling treasuries, maybe deploying that capital in the equity markets? That could be the case. Do we have a basis trade starting to blow up here? Basically, institutions putting on positions for actual treasuries and then utilizing the futures market in order to trade, and then basically making money off the spread. Is that trade blowing up? That could also be the case. And I think the biggest boogeyman that is out there is foreign demand. Are we actually seeing foreign buyers of treasuries liquidating overnight? Was this a pressure move coming from China? Those are all speculations, but we will get some greater clarity about that during the treasury auction. And you want to look at the indirect bidders portion of the results here. And if we see that coming in weak, if it comes in below 60% or so, that might give you an indication that yes, foreign buyers are stepping back. That could push yields a little bit higher, and that uncertainty could also push volatility up higher as well. I think this is probably the biggest vol-moving event today, outside of any response that we see from President Trump, which last time around, 48 hours ago, around this time, an hour into the open, is when he responded with those 50% tariff threats. And that is something that we're also going to keep on the radar here. But this move in yields is not normal, and hopefully we do see some further stability, because this actually could push the Fed into actually taking action. If these auctions are coming in fairly weak, they might have to step in and actually bid up some of these treasuries if there's just no demand that is out there.
Yeah, look, domestic investors own the biggest chunk, 29 trillion in the Treasury market, but the foreign investors and the China story and these Treasury prices that, quote, have been bullied lower in the past few days, according to some of the folks here that I'm reading through. And today's Treasury auction, to your point, at 1 p.m., the 10-year debt of $39 billion will be most important. So that could be make or break, according to this article in Barron's and what you're saying here. Volatility, also very important to gauge.
Yeah, definitely. And we're getting actually pretty close to having the third highest volatility index reading here, if you're looking at the VIX, since 1986. So we're getting fairly close. Once again, we just probably need like one more news headline that's negative to really try to push us over the top. But it just exemplifies the fact that we are at an extreme level. And it's very difficult here if you are trading volatility products, Nicole, because the premiums are so expensive. Traditionally and eventually, volatility will come down. But how do you play that, I think, is the biggest question mark that is out there, and probably why you're also seeing a little bit of a lack of liquidity in the market as a whole. If you're looking at SPX options, if you're looking at VIX options, or even if you're looking at E-mini S&P futures. So this makes it actually fairly difficult, but the lack of liquidity will continue to push this higher. News flow will continue to push this higher unless we get a breakthrough. And once we do get a breakthrough, Nicole, just like we saw early yesterday, the market's up 3.5% or so, that could create a rip rally. And I think everybody's kind of waiting for that and hoping for that type of scenario here. It just has not been able to come to fruition as of yet.
Okay, we'll see. And when we've had the rallies, they really fizzled. And there are frustration certainly being shown by some of the traders here. You see it on social media. But the volatility, some people like that, and they can use that to their benefit. Kevin Green, nice to see you. Thank you so much.